Okay, everybody, how you doing? It's Acorn Wealth, John Seville here. This is your executive summary for the 5th of February. And again, like we've seen in the last few weeks, lots of volatility, lots of action. Of course, we printed the daily opening range for February on Monday, a high of 2021, a low of 1980. That's the range that it needs to stay above. And so far, it's continued in true open range fashion up over the last 3 days. Now, we are at resistance. We've got a triple top here. So what we could likely see is a pullback in tomorrow's markets, offering entry points for rallies or momentum trades, and then a breakthrough, which will ultimately be the fourth test of this resistance, looking for, again, another about a 50-point rally from there on the S&P 500. Twigs money flow has remained above zero, which is a key thing. So right now there is a certain bias to the bulls. And so therefore my focus for tonight's scanning was very predominantly based around momentum stocks that are breaking out. And the first of which that I found was CONN. Now, CONN had a just fantastic rally today, going up 24.44%, and with a 2072 closing price. So this could be an excellent trading opportunity. It's got, if we fill the gap up to where we were before here, around 23.48, so we look at, say, a 23.30 target. Well, that's $3 above where we're currently at. Now, in terms of looking for an entry point, the ideal would be a pullback to the 9-day moving average at 1711, which I talk about, say, 1733, to give it a little bit of room. But if we look at the hourly chart, you'll see that we've got some horizontal resistance here, which it previously gapped down through. So I think that really the best chance we have for an ideal entry point on a swing trade basis is a pullback to this level, just around 1793, 1790, and or really anywhere around this $18 price is something I would consider acceptable. Will we get it? It's hard to see. What could be what this could just do is just continue on rallying. But from a risk-reward standpoint, if you're not actively watching it as a day trader, that's how I would swing trade: is wait for that pullback to the support and then rally from there. Okay, the next one. Okay, the next one is HELY. Now, HELY, the Canadian helicopter company, they've got basically a nice kind of very strong downward momentum move that's coming to a squeeze right now as well. So I've looked at, looking at this, you can see the accumulation on the money flow. You can see that the trend line of our resistance from before comes in at around 276, and we've got moving average resistance above at 213. Sorry, is the 20-day moving average, and 9-day support at 199. If we look at an intraday chart, you'll see that we're in a channel which also supports the idea of support being around $2. So what I'm looking at for an entry point here is 205. I'd be looking for a short-term target of taking profit at 220. That would be the day trade here. So 205 entry, 220 exit. But on a swing trade basis, looking at the same entry criteria, this thing's got a potential to run up as high as this kind of previous high here of 272. So I'd be looking at 267. As an exit target on a longer term trade. So from 205 to 267, that's 60 cents of reward or a 30% run, which certainly would be adequate. Okay, now as we flip to the next one, so I'll just get that off the screen. Okay, the next one is DWCH, which is Data Watch. Okay, so Data Watch, very similar story. You see a lot of these stocks have very similar charts. We're looking at that squeeze and then the potential for it to break out. So what I'm looking for in Data Watch is a breach of 615. So I'm looking for the kind of entry criteria around 617, which breaks that gap down level, and then looking for that to rally up here to 719. That would kind of fill the gap. And that's also going to get a stem of momentum as it continues through the overhead moving average, breaks the resistance, and hopefully then trades up into those levels. So that would obviously be a very healthy gain of, we're looking at, again, what's that, $7.19. So we're looking at $1 rally on a $6 stock, which is ample. I mean, we're looking close to 20% there. So that's the third one on the list. GlNg is the next, and GlNg has kind of had a break here. We're looking for a shorter term kind of move on GlNg. It's got this kind of breakout potential. You can see that the moving averages are squeezing a little bit. So on GlNg, the potential for it to move is looking for a pullback to the 9-day moving average. So looking for a pullback to say 31.40. Or anywhere around that range, but 31.40 is about right by how I read it here. And then a first target would be up to this resistance you can see that I'm pointing out at 37.03. So there's that's again a big potential mover, and a second target would be up here at this level at 42.22. And that's kind of where you can see that that resistance coming in just before it hits the previous level that you can see back then in October. So looking at 31.40 up to 37.03, and as a second target looking at 42.22. NTLS, oops, better write the right symbol in. NTLS is a lovely little consolidation pattern. Again, very similar, all similar stuff. NTLS has been a consistent performer in terms of technical adherence or adherence to technicals in the past, and this is another one that if we can get a pullback down to say 435 to 437. Then that's going to hit those moving averages. The current after-hours price, I believe, is at 433, even though it closed at 460. So a pullback to 437 should be a nice potential rally up to then the first level of resistance that we've got here, based off these horizontals, and that comes in at 487. So that's just above a 10% rally. But what could be even more impressive is that if it's able to break that, this thing could rally all the way up to challenge this moving average, and that's going to come down. So let's assume that's going to come down somewhere around $7 or lower. But so let's say we talk about say 678 as a secondary target based on how those moving averages form up. But obviously that's a huge room to move if it overcomes that overhead resistance in the short term. And then the last one on the list is SZYM. It's a play on the solars. And very similar, you can see the same thing coming through. This is all from kind of our fallen angels type of strategy. And there's some concern within our analysts about the fundamental viability of the solars to continue rallying, but right now, I mean, look, it's got good potential. And again, if we look at the supports at $2.34, we don't have a resistance level in sight here until the overhead here, which was a high of 297. So if we can get a pullback to 240, and we can get a target of 287, that gives us so that's what are we saying, with 240 to 287. Yeah, we're dealing with 47 cents of potential profit, which is on a $2.40 stock, obviously 20%. So this is the type of returns we've seen on some of our recent picks, like REXX, which just absolutely shot up 40% over 2 days. Again, very similar pattern that we're seeing that on SZYM with this potential for it to break out. So again, 240 up to 287, but if it can overcome that, then the next target in place would be approaching that gap down we saw earlier in the year, up to this price here at 386, just shy of that $4 high. So That's where we have it now. Of course, one thing is that I'm never a big. I wouldn't go out and just buy all of these. What I generally do is like take what I would normally put in two positions and split it between multiple stocks, like the list we've gone through. Or I would set up an OCO group so that if I only wanted to buy one or two stocks long tomorrow to make sure I'm not overly leveraging myself in one direction, then what I would do is set up an OCO group so that once the first two longs trigger, it cancels the other ones. So those are things to consider. I generally try to stay away from buying, 5 or 6 longs all on the same day. I like to be a little bit more cautious, but those are a couple of tips and tricks you may incorporate into your research, and certainly look forward to seeing you all in the next executive summary. Take care and happy trading.